You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to the Options Insider Radio Network, our series of interviews down here from scenic and quite sunny and warm Orlando, Florida for the Securities Traders Association National Conference. Change of venues this year, moving it out of DC, moving down to Orlando. So it should be interesting. For me, the visuals are the same. I'm still in a room, listener, somewhere talking to people just for you folks. And next up on the old network are two newcomers to the program and indeed to the network. They are Patrick Travers and John DiBacco, the global head of derivatives over there at Clear Street. Gentlemen, welcome to the Options Insider Radio Network.
Thanks for having us.
Thank you. Thank you for having us.
As we like to do with all of our first timers, and we never had anyone from Clear Street on the show, so let's start there. I'm sure some of our listeners are asking, what the heck is Clear Street? So what is Clear Street? What do you folks do?
Yeah, that's we tend to get that question often. Majority of the folks that are on our team, not just within the derivative space, but across the firm, are from bulge bracket banks, equity finance background, trading background, vol background, various different businesses that, banks are been doing for a long time. Clear Street was founded about 5 years ago. Literally from a handful of folks who decided they wanted to build their own cloud-native clearing system, and thought that the product that were in the market were, quite frankly, not really that efficient from a technology perspective, both behind the scenes from a clearing perspective and also from a front-end user perspective. So the firm raised some capital. Have friends and family initially 5 years ago. Went out and started to build a clearing system that's all cloud native on AWS cloud services, and then from that point on started building today, which we have a relatively successful and large derivatives business, which, as you know, is ran by John DiBacco, who we were fortunate to hire about a year ago. We have an equity finance prime brokerage business that's up and coming that we launched probably 2.5 years ago. We have a futures clearing merchant which just went live. We're launching a UK broker-dealer for all the same products we discussed. And we're obviously, for this conversation, doing a lot more on the agency vol side.
Isn't it fascinating? Not that long ago at a conference like this or at the OIC conference, Amazon and Google, they were kind of dirty words. Cloud was a dirty word, and everything had to be siloed, and no one wanted to even talk about that kind of thing. And now here we are, not that long later, and they're literally the backbone of a lot of what we're talking about here today. So the worm has turned to a great degree. I have a lot I want to get to, a lot of stuff going on in the world of options. But before we get there, what brings you guys down to STA this year? What are the hot things you are looking to address down here at STA?
Well, a couple of things from my perspective. It's we had some folks attend last year. In my prior life at a large bulge bracket, we had 10 to 15 people attend each year, especially around the trading side, vol side. As John will give some detail, we're super active in the ETF space, and especially on, as I mentioned, agency options, and the growth of this business from our perspective is pretty significant, and the opportunity set's pretty significant. So I don't want to say it's our first foray here, but I think we're a diamond sponsor this year. We'll have a lot more representation next year because of the opportunity set of, number one, what's going on in the market. Number two, what are our peers doing? Number three, are there advancements and things we should be thinking about that we're not? So really educational from our perspective, and obviously networking, which is hugely important.
You mentioned the growth of the option space. Let's start there. The hot topic everyone wants to talk about coming in here today is there's yet another venue throwing their hat into the fray. I tend to shy away from talking about this because we do it all the time, and I see a lot of our listeners, I could see them virtually right now rolling their eyes. I go, another exchange, who cares? But it is kind of interesting in the fact that it's a newer player. It doesn't have an options venue. It's not, NASDAQ launching number 7 or something like that. So there's a little bit of interesting grist for the mill there. But I'm curious from your perspective, coming at it from the particularly the institutional options side, what are your thoughts on this continued proliferation of venues? I mean, is it just a scale issue? You just scale up a couple of other servers on AWS and it's not a big deal, or is this something that maybe concerns you down the road? We get to this tipping point where maybe we're causing a little bit more fragility, a little bit more complexity in the system than maybe we need? You mentioned the growth of the option space. Let's start there. The hot topic everyone wants to talk about coming in here today is there's yet another venue throwing their hat into the fray. I tend to shy away from talking about this because we do it all the time, and I see a lot of listeners. I can see them virtually right now rolling. It's another exchange, who cares? But it is kind of interesting in the fact that it's a newer player. Doesn't have an options venue. It's not NASDAQ launching number 7 or something like that. So there's a little bit interesting grist for the mill there. But I'm curious from your perspective, coming at it from particularly the institutional options side, what are your thoughts on this continued proliferation of venues? I mean, for you, is it just a scale issue? You just scale up a couple of other servers on AWS and it's not a big deal, or is this something that maybe concerns you down the road? We get to this tipping point where maybe we're causing a little bit more fragility, a little bit more complexity in the system than maybe.
So maybe I start us off. So just to follow up on the previous question and this one, because they go together. We're a pretty young broker-dealer. So every year we've been hiring people, building our teams, building our infrastructure and process. So the scope of services that we can provide has been expanding. So being at an event like this year, where you have hundreds of people who are it's good for us to put our ear to the ground and hear what they really want, and sometimes read between the lines because you're in person and you get to hear the Q&A at the conferences. So we want to hear that because we're still in growth mode and expanding, which touches on the markets expanding. So I think we have 18 exchanges, and this will be the 19th.
Somewhere in 1947. I lose track at a certain point.
It's a little tricky. It's a little tricky to keep track, and we're very aware that each of these exchanges have different market structures between price time, maker taker, and so we're supportive of people or firms trying to expand their business profile. We're trying to do the same, and most of our institutional clients are not market microstructure experts. So if there's 3 exchanges or 25 exchanges, they just would like to know that there's a posted market and it's liquid and they could get access to liquidity. And they're leaving it to us to decide how best to execute and get best execution through high touch execution trading or algos that we are working on internally. And most of them are a little bit detached from the nuance of this conversation. If we wear a slightly different hat and we think about from a market structure perspective, we want an ecosystem where all of the participants are valued in a way to ensure that we have robust, safe, and resilient markets. And the market makers are a big part of that. So they publish quotes. There's well over 1 million unique options. And if there's 18 exchanges going to 19 exchanges, if these folks are posting quotes on all of them continuously, they'll have tens of millions of quotes in flight at any one time. That's a hard thing to do, and I think people easily forget how challenging that is. And I think a lot of people don't want to think about it. They rely on the market makers, their prime brokers, their executing brokers to put all the pieces together for them. And for the most part, that works pretty well. However, down the road, to part of your question was, like, does that dilute our resources of the community to the point where we have to pause for a second and say, hey, are our markets still robust and resilient? Currently they are, and we just got to keep an eye on it. So I think we can handle it, and I think we'll put the pieces together to make sure everything works smoothly. So from our client's perspective, it's easy, but there's a lot of work that goes into adding an exchange.
You mentioned the institutional clientele. For me, one of the more fascinating evolutions in the option space, particularly over the last couple of years, has been the explosion of interest in the short dated stuff, the zero DTE stuff, as they like to call them. Everyone here likes to talk about that at a conference like this. You mentioned the institutional clientele. For me, one of the more fascinating evolutions in the option space, particularly over the last couple of years, has been the explosion of interest in the short-dated stuff, the zero DTE stuff, as they like to call them. Everyone here likes to talk about that at a conference like this. But for me, you maybe expect some of your very hot retail to dive into the zero-day and sling that stuff. But when SPX is putting up 50% of its volume every day in zero-day, that's not just your grandmother from Iowa. That's big funds doing this stuff too, which has been fascinating to me. I'm curious, from your perspective, as you're putting up a lot of this flow, are you as surprised as I was that institutions gravitated to this so quickly? And then B, has that posed any intriguing challenges for you guys over the last couple of years as you're scaling up systems to handle all of a sudden an explosion of zero-day SPX that maybe you weren't planning a couple of years ago?
I can start us off. We've seen a bit of an uptake from our institutional clients on 0 days. We have not seen an explosion in volume on 0 days. Our customers would use them as need be to buy or protection or to express a view. From their perspective, they like the advantage of, I want to buy protection, but I only really want to buy it through this event. I only want to pay for 1 day. I don't want to pay for 1 week or 1 month. And so it changes the market dynamics. I feel like it impacts the market makers more than it does the executing brokers. It just gives us more things that we have to be careful that we don't have an error because we picked the wrong expiration. But so, yeah, there's an uptake. And you're right, both institutional and retail are driving it. Professional traders are also driving the growth of 0 days. And we have heard inquiries into, hey, are we going to get this for single names? And I think that's going to be one of the next logical progressions of it. And I do think that will get a little tricky. For indices, it's pretty easy to manage, but for single names, I think it might get a little tricky.
Yeah, I think to John's point, what we've seen is it's more episodic in terms around kind of things around an event. Name the event and where someone wants to put a hedge on, right? It's obviously cost efficiency to have the ability to take out your overnight, put my head on the pillow risk. So we see more that way than really kind of more bets, if you will, on the market side.
And it's interesting to me that a lot of the pros, you're right, have expressed that interest to me that they like going home flat. That was always the goal back as a market maker, right? Go home. You never could do it. So now you have products that are literally designed to let you do just that. So I think maybe in this post-pandemic world, we undervalue the peace of mind of going home flat at the end of the day. When I talk to a lot of guys who are still in the market making or some types of other types of business, that's the main driver for why they really like a 0 day right now. Speaking of events, you just mentioned events, and you talked about the resilience of the market. We saw that tested not that long. It seems like a long time ago now, but it's only been a little over a month. Obviously, August 5th, the big meltdown. There was a lot of people, myself included, kind of wondering, we haven't really had a big shakeup in this post-zero DTE era. We kind of only have jokingly referred to the 0 day stuff as gamma bombs on our network. We're kind of always, are they waiting to blow up at the wrong moment? Market survived. Everyone survived on August 5th. It was a pretty aggressive move to the downside and to the upside. Were you guys both as surprised that at A, the resilience of the options market, we didn't see any major meltdowns, and that B, that in this maybe post-short dated era, things didn't go haywire like some people predicted?
Yeah, it was surprising. Listen, multiple decades of experience in the space. It was surprising. It felt like it was early August. They're probably especially in the European side, a lot of folks were not at their desks. There were no real macro events or anything specific around a name or anything in a sector. And we just saw 125% vol increase out of nowhere. It was super surprising from our side. I mean, in terms of the, how orderly things reacted after that was, kind of to your point, waiting for the next, shoe to drop. Nothing really occurred, right? We didn't have any, as you said, explosions. We didn't hear anything on the street. We didn't see anything in the marketplace. But, my personal opinion is when you sort of have those events in August, it usually becomes a little bit of a liquidity event because the folks on the larger institutional side, generally aren't around, or you have skeleton crews in some of the larger, bulge bracket institutions, and those things tend to occur. We've seen them, over multiple different years where you've had events where you'd have that day in the middle of August where you'd have a huge downdraft. So, pretty surprising, but, it wasn't like it was unprecedented.
Yeah, I think I am always confident that the U.S. equity option index and index option markets are well designed and pretty robust. It appeared to be a tough morning, and the market did bounce back from its early morning lows. I wasn't terribly surprised that it was mostly a non-event because I do think our markets are well designed and we have pretty good transparency, we have pretty good redundancy, and we have pretty good liquidity from a pricing and funding perspective. So I'm happy it worked out well. And it doesn't mean I'm not appreciative that it worked out, but we're fortunate. We have well-designed markets that are working well.
We're here at the STA conference, obviously a securities-focused conference. A lot of the talk at a conference like this, and even back at the OIC conference a few months ago, the other contentious issue everyone was debating was this notion of should we continue to expand these markets? We have a variety of different shows on our network, and it's interesting to see the frame of reference people have for trading times when they come to our network. If they come from the crypto world with some of our crypto content, they just expect this 24/7 free-for-all now. That's the way it is in the crypto space. Futures, to a degree, they have some of that expectation as well. But the equity space, they've come to, I think, enjoy this respite they get, talking about going home flat before, the respite they get at the end of the day when the bell rings. NYSE has been exploring, a lot of other venues have been exploring this expansion of securities trading, and as a result, obviously options trading as well. I'm curious for you guys, where do you fall on that? Would you like to see this? Is it the inevitable outcome for the options and stock markets? Where are we headed?
You want to start us off?
Well, yeah.
I talked
funny enough
already, so
yeah. Funny enough, we actually discussed this over breakfast this morning.
Pat and I have a good relationship. This is how we bond.
Yeah. So the benefits of having a crypto type 24-hour marketplace, or extending trading hours to 12, 14 hours a day. My personal opinion is I thought we'd see it go the other way, where you'd have kind of pair offs in a smaller duration of time. And one of the things we mentioned, which is super interesting around John's point around efficiencies, when you see some of the big the FANG stocks or some of the well watched tech stocks come out and announce earnings, right? The stock will generally trade up or down to a level, and the following day it generally sits at that level, trading 50, 60, $70 billion of gross notional. So that tells me there's a lot of efficiency, that the stocks generally go there real fast and they stay there. And obviously, depending on what's said in the call and future guidance, they'll move around. Personally, I don't see the benefits of extending out to another 5 hours of trading. And from an economic cost perspective, it obviously becomes more expensive for folks, and ourselves included, and banks and dealers and market makers to now have people have them staffed. It increases your expense line. So are there added benefits on the top line? Don't know. But like I said, personally, I thought we'd see it kind of go the other way and narrow down a little bit, especially when you start looking at the volume curves, and percentage of volume traded on the close is massive, right? So it'd be interesting to see what happens.
So you don't think we're getting there anytime soon? Then does it sound like it?
That's not my personal opinion. I don't think it happens.
So I think when looking at market structure, one of the first things to focus on is we want robust and resilient markets. If we can have confidence that our secondary markets are robust and resilient, that's good for capital formation. It's good so that people with business ideas who need funding could find people who have the funding, and it creates an efficient capital market. If our capital markets needs to expand with regards to continuous trading, then maybe we'll do that. I don't think we need to. I think a better idea might be is some limited experimentation to try it out. And so with maybe a subset of names, we start extending the time period. We have 32 and a half hours a week. Can we not express what we want to trade in that 32 and a half hours of market? Maybe not. Maybe people need more time. But it's unclear to me as if the trade-off will be worth it, because as we take more resources to add more time, do we continue to keep markets robust, safe, reliant? And if we could do that, then fine, let's expand. If that's a challenge, let's expand pragmatically so that we keep everything resilient and robust.
So it happens more of a limited pilot. It's kind of the way you think. Tiptoe into it as opposed to 24/7 free for all.
And I think that would be safe. I look at crypto changed the world. People want 24/7 trading. However, it is sometimes to close and to make sure that there is funding and the margin requirements and all the back office infrastructure items are met. And a lot of people who think about trading don't think about the infrastructure. And I think it's a luxury to be able to not worry about it because someone else is. We got to be a little thoughtful. Just because crypto's trading 24/7 doesn't mean everything else needs to, and maybe we get there. If we're going to go in that direction, we should do it pragmatically in a controlled fashion.
So, John, I believe you're on the options panel tomorrow.
I am on an options panel. This is good practice. Thank you.
Give our listeners a little preview. The folks aren't coming to STA. What are the hot topics on the options panel tomorrow?
So you're actually nailing them. You are.
I've done this once or twice.
It's like you got you've been in the industry. You got the news ahead of time. A lot of questions on zero DTE. Will we see zero DTE expand into single names? A lot of questions should be about the length of the trading day and the number of trading days in a week. Do we want to see that expand? And we're meant to cover some topics where there is some overnight trading and there are some businesses and companies targeted doing this thing. So those are two primary things. And then there is new product. Like do we expect to see more crypto-based options listed, more options on crypto funds? And I don't know if we're going to have time to cover everything. But those are, I think, three of the biggest topics.
That's been a hot button issue we've had a lot as well. I've heard a variety of opinion on when or even if we'll ever see the options on the Bitcoin ETF. Sounds like some people are pretty dire on it. Just had the NASDAQ folks in there. They seem a little bit more cautiously optimistic. Where do you guys fall on that? You think we're going to actually see Bitcoin ETF options in our lifetime, maybe sometime in the near future?
Well, since I sleep in Tupperware every night, my lifetime's long. My lifetime. I'm just being weird. So we do have crypto options on the futures, and we have options on some limited products, and it kind of depends on which product it is, whether or not the product holds crypto or crypto futures. So we have a little bit of it emerging. Will we? And there are the non-major U.S. exchanges. There are places to trade OTC crypto options now. Do I see that evolving? I do, and I do think it will happen in our lifetime. I think what's going to happen is our country and the developed countries around the world will have to come up with a crypto philosophy. Do they want to or not want to support it? Because there's a lot of market participants who follow the rules and don't want to run afoul of any rules, so they stay away from it. And then there's a whole bunch of people who say, well, this is the cutting edge of finance. I want to be on the edge of finance, so I will figure out how to manage the ecosystem. If we can find the ecosystem a little bit better quickly, but that's yet to be defined.
Yeah, I think to kind of add to John's point, the fact that we've seen the regulators approve multiple 2x products, inverse products, IBIT type products that are listed exchange products. My guess is options probably aren't far behind. So I wouldn't be surprised if you saw something in the next 6 months or so in terms of listed options on the products you mentioned earlier.
6 months. Well, that's optimistic. I like that. Obviously, we talked a lot of market structure and a lot of the institutional trends. We also have a lot of active retail listeners as well. Tell us a little bit about Centerpoint. Is that your white label for the retail space?
Yeah, it's I wouldn't say in essence, quote unquote retail. We have, for lack of a better term, professional traders that aren't the $6 billion professional trading shop. So it's generally it was an acquisition that we made just before 2020. So it actually, the timing was pretty paramount. Yeah, it was pretty paramount. But yeah, the view of that is exactly correct, where it's an institutional platform for active traders, right? So again, when you start talking about, you start looking at the TAM, which is pretty interesting, and think, okay, if we want to, let's say, roll this out to retail, the numbers get real big real fast in terms of your total addressable market. And then, okay, is there a minimum where it's $30,000 for an account, or is it $200,000 for an account? Again, to John's earlier point, there's expenses associated with onboarding, with servicing, with technology, right? With being able to provide them sort of cutting edge OMS, EMS, PMS. So it's something that kind of fits really nicely with our institutional business. But as you mentioned, it's a sister company, within it's a division within Clear Street, which was branded Centerpoint, which is now Clear Street Active, as we call it.
Well, gentlemen, I appreciate you joining us today here. We have to keep the interview train rolling, but before we roll on out of here, we like to leave our audience wanting more. So give them a little bit of a hint, a little bit of a tease of what they can expect coming down the pike in the coming months from you guys over there at Clear Street.
Yeah, listen, I sort of alluded to it earlier when we first started, but if you start looking at our quote unquote market capabilities in terms of products and our regional capabilities, global capabilities in terms of regions, within the year, we're going to have some pretty interesting go live information that we're going to be able to share with folks, which then, really extends the breadth of the product from institutional perspective, both across asset class and region. So stay tuned for the next, I would say, 6 weeks or so.
Oh, very soon. And if folks want to keep tabs on all that, where should they go? What should they do?
You go right to our website, which is it, if you know the website address. I think it's .io, input output. So obviously tech firm, but it's a pretty robust site. We just redid, enhanced it. One of the things which makes us obviously a differentiated broker dealer, and all these things are super important. But we have 260 engineers that are onshore, in the U.S. So we kind of pride ourselves on front edge sort of cutting technology. Folks can see that through the website, and then obviously there's always places where they can inquire if they have further questions. That gets fed right into the team, so we could always respond back to them.
Clearstreet.io is the place to go. Well, gentlemen, I appreciate you joining us today, and we'll look forward to seeing how all this unfolds in just the next couple of weeks. It's exciting.
Mark, thank you for having us.
Thanks for your time.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.